day.
There's apples under pressure.
You buy stocks on Tuesday and sell them on Friday.
The market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it.
This video is sponsored by the award-winning Daily Market Movements trading platform. To open a live or demo account, simply visit dmmtradingplatform.com. Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analyzing the Nasdaq100 futures chart. Just before I start today's video, anyone who is interested in joining my free analysis group over on Telegram, then please do not hesitate to scan this QR code. It's completely free of charge to join, so go ahead and scan that QR code. Let's start with the Nasdaq100, a very volatile trading session so far today. We're already down 3.4% and the markets haven't even been open 1 hour. And this is due to the fact of a slight miss on the CPI reading, to many people's surprise, including myself. I was expecting a number, sub 8%. I thought it was going to be around 7.6%. But we got 8.3 versus 8.1% expected year over year CPI inflation. So what does this mean? This means that basically the Fed has to become more aggressive because what they're doing isn't as working as well as many thought. So we are, most probably definitely going to see a 0.75 basis point hike next week. And there's even some saying that there could even be a 4 basis point hike. So I think at this moment in time, the yields are telling us that there's going to be a 0.75 basis point hike this month. And the next month, we're going to see another 0.75 basis point hike. So what does this mean? It basically means that the stock market was completely wrong-footed going into this CPI printing. The last 4 or 5 days, the Nasdaq100 had rallied significantly. So we had basically priced in a good number here for the CPI. At the swing highs going into the print today, we were up around 8.5% over the past five trading sessions. So what does this mean? This means now that the markets are highly likely to give up all of last week's gains. So I see the Nasdaq100 going down to 12,000. We could potentially bounce there, but if we do take out 12,000, then that opens up the lows down towards 11,000. But this should be seen as a positive. Reason being is because it was only yesterday when I was saying, I have been dollar cost averaging this whole process here. I haven't been buying on the way up. I'm happy with the dollar cost averaging I've done, but guess what? If we get to go lower, or for anyone who missed the fantastic opportunity to enter, all the way down to 12,000, this is your chance. This is a second opportunity. The market's being very kind, and this is your perfect opportunity to start dollar cost averaging into this market. The lower we go, the better, because it creates more value. And of course, you want to put your stop loss somewhere under June 16th lows, due to the fact we did manage to retrace 50% of the overall declines for the year. And history will tell you that when that does occur, when you retrace 50% of your overall declines during a bear market or a downtrend, it historically means that the lows are in. So that would indicate that the 16th of June are the lows for this bear market. So any value created during this stint here is fantastic. It's a buying opportunity, medium to longer term, and you should be looking to buy the dips, but very cautiously. Don't be going all in here, because the likelihood is that we will probably go down to 12,000. We could even break down lower. So that's very important to understand. I am personally surprised that the CPI reading come in a bit stronger than expected, due to the fact we heard from CEOs like Elon Musk, for example, who said that the materials to create a Tesla car had, the prices had come down significantly over the past month. Metal, wood, etc. Many different, materials had come down, and as well as that, we've had crude oil down. But I think in the inflation reading, we still have rental prices for homes very expensive. We had food prices very expensive. So that is what has caused the CPI figure to stay strong. So of course, this now means the Fed has to become more hawkish. It's going to definitely create some more downside volatility. I think that these are not the lows here. I think we do go down to 12,000 at least. But again, you need to look at it from a money-making opportunity, because eventually inflation will start to come down, and we will see that almighty bounce back towards the upside.
There's apples under pressure.
You buy stocks on Tuesday and sell them on Friday.
The market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it.